Hello, everyone, and welcome to the Your Mark on the World show. We're producing this episode for GoodCrowd.info, and we're thrilled to have with us our sponsor, Todd Crosland at Seed Equity Ventures. Todd, we're always glad to have you on the show. Excited to talk to you every month, and thank you for making time for us today.
Oh, Devin, thanks for having me.
Todd, I think the discussion I wanted to have today relates to your six-step investment process. And I think this is really helpful. I think your process isn't, quite frankly, probably unique. I'm sure that there are nuances that you approach things differently than other people, but this is really helpful for entrepreneurs who haven't approached venture capital in the past, haven't raised money in the past, to understand how investors are thinking about this process. So I really appreciate your willingness to just go through this.
That'd be great.
The first step in your process, as you describe it, is first contact. Let's talk a little bit about how does that first contact usually come about? How do you prefer that it happen?
Sure. So we have what we call the funnel for deal flow that with companies that we look at. And this last year we reviewed applications from about 500 companies, and that comes through a variety of sources. So there's some accelerators and incubators that we work with. We go to some demo days, both in our home state here in Utah and also down in California and Silicon Valley. And then, so we look at companies that come through accelerators, and then we also get referred a lot of companies from larger venture capital firms. We got referred a company today from Sorensen Capital. They like the founder, they like the company, but it's too small of a company for them, and they need to write much larger checks. So we get referred interesting deals from them. Then we also we get 1 to 3 deals a day that come through our platform to seedequity.com, where somebody can go on and submit the information there. Ultimately, in answer to your question, we like all of the proposals and the pitches to come through the platform, because then everybody on the investment team has a chance to look at it. We ask specific questions. You can upload, information, financials, if you have a video. So it's really helpful as far as our funnel and how we do it. Even if they send it to me in an email, we'll require that they eventually go onto the platform and submit it there, then answer just some basic questions, and we can learn more about the entrepreneurs and also about the business.
Well, one of the things I like about that answer, Todd, is that it implies that everyone gets kind of an equal shake, whether they came through an accelerator program where you have a lot of faith and respect in them, or whether it's sort of a traditional over the transom kind of deal, someone you don't know of. Once it's on the platform, it would give you an equal opportunity for you to look at it and screen it fairly objectively, wouldn't it?
Correct. So then it's really apples and apples, because we're looking at, so we ask all the companies, they have to answer the same questions, and then we can, as we do the due diligence on a particular company, it's easier for us to judge that, based on, either pre-money valuation or traction in the marketplace. As long as they've answered all of these questions, then we can really judge it against, the current crop of companies we're looking at.
Sure. Now let's talk now about the next step of your process, which is the screening. And I think by screening, I think you would call this kind of a preliminary step, right? This is before you do due diligence, and in fact, it's the screening you do to determine whether you will follow on and actually do some formal due diligence, right?
That's correct. So, on Wednesday afternoons, we have our investment committee meeting, and we review all the companies, from the previous week. Prior to that meeting, the team will have basically gone through each of the pitches. We'll all do some preliminary, background on the entrepreneurs, looked at their LinkedIn profiles, see what we can gather on the company's website, etc. But then based at that time, we have kind of the first cut. So if we're looking at, we reviewed, I think, 35 companies yesterday for the week. And basically at that meeting, we'll go through, if some pitch to us and it's a new startup and they have a $100 million pre-money valuation, that's a pretty easy no for us. Just, the entrepreneur doesn't understand the market and valuations. And so that's an area that if they're not sophisticated enough to have an idea on a pre-money valuation, then we can cut those pretty easily. And then we just look at the quality of the presentation, the quality of the presentation and their pitch deck. If they have pro forma financials and quality of the team. We look at what the quality of the presentation is probably next, after we look at some preliminary valuation metrics, and then we'll go through kind of most importantly, if we're checking these boxes through our investment meeting, and one of the last boxes is to see if they have traction of some sort. And so if somebody has an idea and they're working at the bank, and if they could raise some money, they would quit their job and launch this company. That's too early for us. We need to get founders that have already committed full time to this project. They have a minimum viable product and they've launched it in the marketplace, whether they've come out of an accelerator or whatnot. And then we'd like to see them with some traction with customer uptake for their product or service. They don't necessarily need to have revenues, but there should be a growing customer base that we can, validate their product and then compare it to marketplace and other competitors and see how disruptive this new, technology might be.
That's a great screening process, and I appreciate you really sort of laying that bare for us so we understand. But it seems like you're really focusing on valuation, the quality of the presentation, and then traction are some real keys there for you in that screening step. And I really appreciate you being clear about that. Now, next you do formal due diligence. And what is involved there? Tell us a little bit about that process.
Well, from the screening, kind of a real-time example from the screening process yesterday, we went through something over 30 companies, and there was about a half dozen that we liked the presentations, we like the industries that they're in, we like their traction, kind of all of the above. And so then with those 6, we're scheduling calls with the entrepreneurs. And so then we'll take it to the next level where we'll interview the founders and we'll have them walk through personally with us, via a WebEx or a Skype presentation, and talk about their company and go through their pitch deck, and then really learn more about them as individuals, and also learn more about their vision for their company going forward.
That's great. That's great. Now, that due diligence process, in some cases, would last months, wouldn't it?
So with these early stage companies, it could be as much as a month or than a month. Ultimately, as we go through and we vet the companies, we'll eventually want to talk to customers that they have, and then finally, if everything is still positive, we'll do we retain a third-party background check on the officers and directors and large shareholders of the company.
The background checks. I see. I see. And then you move on to negotiating an investment. Tell us a little bit about that process. I've seen that process last anywhere from a few hours to a few months. What's a typical investment process for you?
Well, so at that point, we would negotiate it's a placement agreement. And that's where both the, either if it's a PPM, a private placement memorandum, or just a stock purchase agreement, we typically use the Series C preferred stock purchase agreement with these firms. And so it would basically be negotiating the terms for the preferred stock, if it's or a convertible note, if it's a convertible note. So kind of negotiating those terms, and then pricing and valuation is a critical part. And we have examples of in the marketplace of lots of different financing that's taken place for early stage companies. And we have companies that come to us and we like what they were doing, but they were just barely launching their company, and they had a $30 million pre-money valuation, and it was just too rich for us in good conscience to pass that on to our investors. So that's kind of the process. That part of it is education, but if they came through an accelerator, or if they have good advisors with their company or board members, they really get coached well on what to expect as far as valuation. And really, the valuation, I think every entrepreneur would like as high a valuation as possible, but it's really a business plan for your company going forward. There also needs to be kind of a business plan for your equity raises going forward. And so if a new company launches and they're starting to get traction, maybe there's a $4 million pre-money valuation, and then they bring on, maybe it's a SaaS company, and they bring on $40,000 a month in recurring revenue, and they need to do another raise. It almost has to be planned that the next raise, if they want to do raise a few $1 million at an $8 million valuation, then it's kind of logical for the Series A investors to come in if there's had a good return on their investment. So I think it's kind of an education process as we get through the valuation and then negotiating the placement agreement.
Yeah, it makes perfect sense. Then once you close the deal, you feel some ownership, obviously, because you have some ownership, but that translates into a mentorship phase. Tell us a little bit about how you treat and mentor your portfolio companies.
So we haven't been we haven't retained board seats, in our function as our placement agent, investment advisors, as we raise company money for companies, but we continue to help in it, and either introducing them to new customers to help them grow their business, or when they're looking to do a Series A or B round in the future, we can help introduce them to larger venture capital firms that can assist them in those raises.
That's great. And then from there, you're looking at toward an exit. And do you provide any help with the exit?
So we're licensed to do advisory services for companies. Thus far, we've launched about 18 months ago. There's 8 companies that we raised capital for. 4 of them have gone on to raise money at a nice from where our investors came in, but there haven't been any exits to date.
Well,
But
that's
we're
great, and it's exciting to think about that potential. Well,
correct.
Todd, I really appreciate you taking the time to walk through this in such detail, because you've really been helpful at explaining how each of these stages work, so that a company that's looking for capital now has a much better idea how to approach you and what to expect. One last question. How long does the whole process start to finish usually take when you get to across that finish line of financing? How long does that usually take?
Sure. Well, it's taken, we raised money for a company we've talked about before called Demo Chimp, and I think their raise after, we did our due diligence and put it out for investment. I think it was about 72 hours, and we raised, I think it was around $300,000 for them. But then some have taken a few months, and so, I think a lot of it depends on the traction for the company and how exciting their product or service is.
Sure. So from the time they submit on the platform until they close funding, it could be 2 to 6 months?
Correct. Yes.
Okay, great. Well, that's helpful for entrepreneurs to understand that process. So, Todd, really, I appreciate you taking the time again for this conversation today. Before you go, tell people how they can learn more and actually submit their deal on your platform.
Sure. They can just go to seedequity.com and learn about the company. They can view other companies that we've raised capital for. There's a how it works section of the website, and then it's really self-explanatory how to upload information on your company to make an application for funding.
Fantastic. Well, Todd, thank you very much for being with us today. We really appreciate it, and we wish you every success in raising money for these great startup companies.
Devin, thank you very much for having me. Appreciate it.
All righty, let's do some good.